Welcome to the new weekly outlook. So today we're going to go quickly over 3 articles, and then we're going to go over the economic calendar and finally move on to the charts. So the first article that I want to go over, again, a quick summary, and you guys can look up these titles on Google or any other search engine that you use, and you should be able to access them for free if you don't have Bloomberg. But the first one that I want to go over is supply chains. So what we see here as you go down into this article and as you will read through this is that the conditions are somewhat improving when it comes to global supply chain. But what we are also seeing along with that is a slump in consumer demand. And we are expecting that slump could result into more signs of recession deepening over the next couple of months, going even into 2023. Also, we have some potential threats to this improvement, which are caused by a couple of different factors here. As we continue down, you will see that labor strikes is contributing to that. We have factory disruptions in China due to COVID outbreaks. We have the Russia-Ukraine war, which is also contributing to the supply chain issue that we had going on, and also the year-end holiday shipping pressures as well. When you continue down here, they have this quick chart, which pretty much shows you the way to read this is that we're starting to see the supply chain strain starting to fall down in the last 3 months or so, going into almost the 4th month. Now, the key thing here to watch for is going to be the US household demand for merchandise in the next coming months to figure out whether or not this US demand is going to stay strong, which is exactly what you need to have a strong economy, or is it going to start to soften? And then what are the central banks going to be doing, specifically the Federal Reserve in the US, going to be doing in order to bring back the optimism into the consumers so they go out and spend more money? Pretty much when you're looking at the economic calendar, you're going to be watching out for retail sales and anything that have to do with consumers and the retail sales in general to figure out where are we sitting at. Is it going to stay strong or are we going to start softening? Now, moving on to the next article, we have Biden in Saudi Arabia. So he met with the Prince of Saudi Arabia in effort to increase oil production, which would help decrease the pressures on oil in the US specifically. As he was leaving this meeting, there was really no true commitment. As you continue down here, there was really no true commitment to whether or not there is going to be an increase in production of oil production. But this could end up taking several weeks to months, but again, there was no clear commitment on whether or not there will be more oil production. So what we're watching out for now is August, the OPEC meeting in August, and we're looking close to early fall for any indications of whether there will be an increase in oil production globally. Now, moving on to ECB, we have the interest rates coming out from ECB this week, so I really want to go over this article real quickly. We have Europe bracing for a recession as well, alongside US and a couple of other economies in general. So they will be announcing their rate decision on Thursday. Currently, what they have is a fear around energy crisis going into the winter, and this was accelerated by the war in Ukraine, so Russia and Ukraine war. In the US, what we have is inflation due to demand-led surge in consumer prices, which was, again, contributed by the government stimulus that was provided over the last 2 years. But in Europe, what we have is inflation due to soaring natural gas costs. And that comes from the fact that Russia was a huge supplier of gas and oil to Europe, but now because of the war, they cut that off. They start to decrease that. And so the fear are settling in because there's a question of whether or not Russia is going to completely cut off that supply, and is Europe also going to completely cut off that supply? And then where do you turn to in order to make up for the loss of supply there? As we continue down, the biggest concern for ECB here is, so interest rates are, as we know, one of the biggest tools that any central bank has in order to fight against inflation. So we know that they will be increasing interest rates this week, but how do you maintain that consumer confidence in the economy? There is absolutely going to be a recession, and you will, as you continue down in this article, you will see how there are different scenarios that they're looking at, and the fact that there will definitely be a recession, but how do you keep the optimism in the consumers during that time period? Now let's go ahead and move on to the economic calendar. So today we start off quite easy. There's really not much coming out besides CPI in the New Zealand dollar, if that's what you're trading. And then you have the Japanese bank holiday. So I'm not really expecting today's Asian session to be really crazy. Going into Monday, again, we don't have too much coming out until Asian session with Australia, where you have the monetary policy meeting minutes. So if you're trading the Australian dollar, that's what you want to be watching out for. Going into Tuesday, we have some GBP data coming out in the London session, so that's something to watch out for as well. You have the average earnings index, you have the claimant count change, and then you have the unemployment rate. After that, things start to calm down a little bit until late New York session, and then also in Asian session, we have Bank of England governor speaking, and then also Australia's governor speaking as well. Pre-London session is going to be quite interesting. If you're trading any GBP pairs, you want to be paying attention to CPI, PPI, and also RPI. So this is inflation from all three different parts of the economy: the consumers, which are the core of the economy, you have the producers, and then you also have the RPI, which is the retail side. So that's what you want to be watching out for to kind of understand what's happening with the economy. Are you starting to see a slowdown there? If you're seeing a massive inflation, but the interest rates are really not increasing, and they decide to kind of halt that down, especially as they're looking for a new leader in the UK, essentially what does that mean? And can they also see a prolonged recession, or are they looking for different ways to combat inflation? Going into Wednesday, you have CPI from Canada coming out. So if you're trading the Canadian dollar, that's something to watch out for. And then you also have the consumer confidence. Again, if you're trading any euro pairs, that's going to be very important to watch, especially after the article that we just read with Europe's impeding recession. And then on Wednesday, Asian session, you have the Bank of Japan's interest rates coming out. The sentiment that we have from them so far is that they're going to maintain the low interest rates that they have, the negative interest rates that they have, and they're going to continue doing that until they see the signs that they can increase the interest rates and that the economy is there pretty much to support that move. So another thing to watch out for is going to be the Bank of Japan's outlook report, along with their monetary policy statement and the press conference to get an outlook of when can we expect any interest rate hikes, if there will be one. And then finally, on Thursday is pretty much, if you're trading euro, that's what you're going to be watching out for. Is going to be the interest rates coming out from the European Central Bank. As we are looking at the predictions right now, we are expecting a quarter basis point hike. And again, what does that mean for the European economy in general? Watch out for the press conference, watch out for the monetary policy statement, but you're going to get majority of your questions answered in the press conference. So I don't really expect too much to happen in New York session on Thursday, as we will be waiting for the press conference for the European Central Bank. So I don't really expect anything crazy to happen there or too much volume to kick in, unless there are other fundamentals, macro fundamentals that will help us kind of move a lot of these USD pairs. For the pound, also in Asian session, you're going to have the consumer confidence. Again, watch out for that. You want to see the consumer confidence increasing. If it starts to drop down, that tells you something about the consumers, that they're, again, not confident in the economic outlook. Then you have the retail sales coming out also from UK, so another thing to watch out for. And then Friday is going to be interesting, as we're getting a lot of flash manufacturing PMI data coming out from the euro, from GBP, and also from the US. Now let's go ahead and move on to the technical side. So we're going to start off with the monthly time frame for gold, and then we have price kind of hanging around the support area of 1700 flat. And then also I'm going to mark off this resistance where price was pretty much sitting in consolidation for half of 2021. We finally broke through that, and this is going to be that 1755 level. You can adjust these levels as you drop down to lower time frames to narrow down into your zones, but these are going to be the two levels I'm going to mark off of the monthly time frame. We drop down to the weekly. Now, the next area of interest for me is going to be, are we simply going to bounce off of the 1700 area level as we have previously and then continue pushing back up bullish? So as you can see, price held onto this area as support multiple times, and we have had wick rejection. So that's where that 1680 level comes in, which we will mark off here shortly. But can we expect price to just come back and tap into 1700 flat and then push back up bullish? And again, that comes from the fundamentals as well. So currently the fundamentals that we're getting is some sort of settling fear into the markets. So could those be the catalysts that will help us push right back up into 1755 and maybe even into 1900 in general? So 1700 is going to be very, very important to watch out for. As you're getting closer to this level on some of the lower time frames, that's where you kind of have to make that differentiation of, is this only going to be a scalp, or can this be a scalp turned into a day trade or even a swing trade opportunity or anything like that? Now let's go ahead and also mark off another level down here, which is these wick rejections. So we will do 1680 flat. So that's going to be our next target, these wick fills. So these are going to be some of the trades that we can end up taking from 1700 down to 1680 as price makes some more wick rejections. But again, this entire range here is going to be very, very important because clearly that is a liquidity area. Drop down to the daily time frame here and let's zoom out a little bit just to see how price has acted in these levels previously. So as you can see, held on to a major support in 2020 for a couple of months, and then finally we pushed back up, came back down and revisited this area in 2021 of March, and then came right back down again twice in the same month, pushed back up bullish, came back and revisited this area in August, and now we're trying to push back down. But again, you want to make sure before you look for any sell opportunities that the 1700 area is broken, and then you can look for any sell opportunities there. If price simply rejects this, and let's say the next daily candle that we get is closed bullish, breaking some of these highs, then we know that we are looking for a corrective move, potentially coming back up to 1755. So it's very important on the daily time frame and even on the 4-hour time frame that we look for clear resistance and supports to be formed prior to looking for any entry. Again, it's the first day of the week when the market is opening up. Let it make those wick rejections, let it fluctuate as it wants to, as it prices in a lot of the fundamentals that were released over the weekend, and then finally look for your direction there. Looking at how the market closed last week, and it's about to open here in a couple of minutes, we saw price holding onto a support right into 1700. We started to see a bullish push up on the 4-hour time frame. So if I were to really narrow in my zone, I would wait for price to break out of this area right here specifically, and then look for any buy opportunities to the upside. Then slowly you can come up and target a buy opportunity coming up to around the 1728 area, and then pushing up to around 1740, and then finally 1755. So first, wait for price to break above this level right here on the 4-hour time frame, which is that 1715, 1720 area, and then look for your buy opportunities as price continues to push up. Drop down to the hourly time frame, and you see a lot of consolidation here. So when you see consolidation on the 4-hour or the 1-hour, there's really no point to drop down to 30-minute time frame because you need these higher time frames to close out of these zones, out of these consolidation areas, so then you can see the clear direction of where is price headed. If price is consolidating, just let it consolidate and then wait for the candles to close out in one direction or another. Don't try to force a trade in consolidation. Now let's go ahead and move on to GBP, JPY. Again, let's start off with the monthly time frame. Let me zoom out here so we can see the bigger picture. So we have a resistance being formed currently right at this 165.300 area. We see how price has kind of tapped into this area previously, made a bottom wick rejection, pushed up nice with some bullish momentum, tried to hold on to a support here, a resistance, a nice sell-off, and then also a resistance right here very long ago. So it's a very, very strong level, clearly here based off of the monthly level. Another area to mark off is going to be this previous break and retest right here before price pushed up last month and then closed bullish right at that 165.300 area. This month we haven't even made a top wick, as you guys can see. It just made that resistance and then started to push down. We're currently rejecting this area right here at, let's just call it 163 flat. We rejected that and the price kind of pushed back up. So first, this is our range, and if price breaks in either direction, then we can start to target either wick fills for buys up top here or even lower for any sell opportunities. But at the moment for this week, until price clears above 165.300 or below 163, this is really all our range is going to be. You come onto the weekly time frame and you can adjust your levels if you want to right at this level. So you can create this as a resistance if you would like, which is going to be that 165.800 area. And you can also mark off any important zones. So for example, price held on to this area, and we can narrow this zone as we drop down to lower time frames. But clearly for the last 2-3 weeks, price has been holding on to this area as support before it started to push up last week. And then another level that you could also mark off, or a zone that you could mark off, could be right about here, which is where price held on to that resistance. We kind of just fluctuated into that range for a couple of weeks before we pushed back down, came into that 163 area, closed right above it. And then for the last 2 weeks, we have been holding onto it as support. Last week, we also tapped into that zone, but rejected that. So this could end up being your range for the first couple of days for this week until price clears out of this area in one direction or another. You come onto the daily time frame, and same thing here where price gave you a break and retest before a nice bullish push up, a resistance before it came back down for a sell-off back from April to May. And then when we come here, quick little fake out and then nice bullish momentum to the upside, a break and retest here as well. And then you had that resistance being formed for a pullback to give you those higher lows being formed. Now, when you come onto the 4-hour time frame, we start to see how price start to consolidate out here before it closed last week. If you really want to narrow into your zones and you want to look for those scalp opportunities, this is the first level that I would mark off as a resistance, which is going to be that 164,500 area. And then you wait for price to break above that for any buy opportunities going right into that zone. And again, this could be the limitation of your trade for about 51 to around 70 pips, depending on your entry. And if price breaks above that, then you can let runners go up to 165,800. Then I would create a support right here as well. And that could be your 164,150 area. And then as price breaks below that, then you can look for sells coming back down into the zone. Anything in between would be more like a no trade range. So just stay out of this. Again, price could just end up fluctuating here until it gets a catalyst to break out of this zone in one direction or another. So wait on the hourly timeframes and 4-hour timeframes for price to break out of this. When you drop down to the hourly, you see all this messy consolidation. Another confirmation for you to just wait for price to break out of this range and then look for your trade opportunities, either for a buy above 164,500 or sells below 164,150. Now let's go ahead and move on to US30. Same thing, if you zoom out, then you can see that we're sitting at those all-time highs currently. I'm going to mark off the current support that price is making, and that's that 30,700 area. And then I'm also going to mark off the current monthly wick high right here. If we break the current monthly wick high, then we can look for potential buy opportunities even further up. And this is going to be that 31,500 level. If that is broken, then we're looking for a potential buy opportunity coming right back into these support areas right here, which is right into that 33,000 mark. Drop down to the weekly. So right now, again, this is our range right here. When you're looking at the weekly, we can see a clear sell-off happening. So there was a break of structure here. From 2020 until now, we've had a bullish structure right here. Price consolidated at these all-time highs and then finally started breaking structures, creating these lower highs and lower lows. When you look onto the weekly time frame here, we can see price holding onto a clear resistance for the last couple of weeks. Last week, we broke the lows, rejected all of this, came back pretty close to that 31,500 level. So we want to see if this week we can continue pushing back up bullish and then target that 33,000 mark and then continue pushing back down from there, because as you look at the bigger picture from an economic perspective, fundamental perspective, we don't really have a lot of optimism to see price coming back into these areas. So this is going to be a very key level, and then you can see more fundamentals coming out. According to the fundamentals, then you will kind of see the direction where price will be headed. Or are we just simply going to reject off of this area, potentially create any top wicks or anything like that, and then come back down and tap into these supports right here? But first, our range is going to be between that 31,500 and 30,700 level. Now we drop down to the daily time frame. On the daily time frame, all of this looks like a massive consolidation area. Whenever you see this happen, just kind of look to any previous examples that you may have had. So there's just a couple that I can see right here, right off the bat. The first one's going to be back here. We saw a lot of consolidation, and then we saw great movement that followed right after. Same thing, if you want to look at something a little bit more recent, all of this was massive consolidation and great movement that followed. A lot of consolidation at that key level of 30,000, 33,000, and then price pushing down with a lot of great volume. So same thing here, we have this massive consolidation. We want to see, can price continue to hold on to this 30,700 area as support and then finally break above 31,500, and can we look for a nice bullish momentum kind of mirroring this entire sell-off that happened, potentially to come back into this 33,000 mark and then look for a sell-off? Or is price simply going to tap into this 31,500 and then can we look for a sell-off to come back down into these areas of 29,000, 30,000 area flat? So just because the daily time frame is consolidating doesn't really mean that we can't look for trades on lower time frames. But again, this is where you want to be extremely careful, because when you look onto the 4-hour time frame, we haven't had any single retracements forming here or even a break and retest. It's been a massive bullish momentum on this 4-hour time frame ever since it came back and tapped into this 30,300 area. So what we want to see is clear resistance being formed. We want to see that healthy bullish trend if we are to look for a continued buy opportunity. What that essentially means is pullbacks right into this 30,800 area, 31,000 area flat, and then a continued push up from there if we're looking for any buy opportunities coming up to this 31,500, and above that maybe going into 33,000 area flat, or like price has been consolidating here and we saw a nice bullish momentum, quite similar price action to what we see here. Can price come up and consolidate, and then we see another sell-off coming right back down to this 30,700 area. If that happens, then we're looking for any sell opportunities, maybe even into New York session, coming all the way down to this 30,700 area. But we want to make sure that we have narrowed into our zones and kind of figured out what are going to be the important levels here if you're looking for any scalps or day trade opportunities. So what I would narrow in on is going to be this zone right here. If price breaks above that, I want to be very careful here. Anything above this is going to be a no trade range until price finds its clear direction. If there's a sell-off, then I would be looking for a sell opportunity below this zone here again, coming all the way down to this 30,700 area. If I'm looking for a sell, same thing, hold on to a resistance and then look for a sell as price starts breaking this previously 4-hour lows. So it's going to be quite similar to the sell-off that happened here when price gave you a clear indication right here on this 4-hour time frame where it made that top wick rejection, came back and started breaking all these 4-hour lows, and then the sell-off happened here. When you drop down to lower time frames, you kind of want to go back and look at if there were any break and retest here, or was there important fundamentals that were coming out here? Was this the market open that kind of caused this volume? And then how can you take advantage of a similar move potentially at this level if there is a sell-off? Otherwise, I want to see a break and retest being formed here and then a continuation up. Again, above that area, not right below it or anything like that, because we have seen fake outs. And then let's drop down to the 1-hour time frame. So here we have a little bit of a support being formed, but let's take a look at how price has reacted into the zone. You had a nice little break and retest, price pushed up with some good volume. We had consolidation right into that area. We've had price hold on to this area as resistance, and then even grab liquidity and then that massive volume to the downside. Right now, we just held on to a support and price is pushing up. The last hourly candle broke the lows and the highs. It looks like we're trying to push up, but can we just hold on to a resistance and then look for a sell-off here? So that's it for this week's weekly outlook. If you guys have any questions, feel free to reach out at any time. You can drop a comment or you can reach out to me on Instagram at SharmaFX. Other than that, have a great week, everybody, and make sure you're trading safe.